Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to the Australian Stock Market Show. Tonight we cover some exciting stocks including Select Harvest, Scentre Group, Vicinity Centres and more. We also have great questions tonight about stop losses, trend lines, portfolio performance, candlesticks and short selling. And so I'm sure there will be plenty of great insights and tips as we discuss these areas that will assist you to learn more about the market. Later on in the show, we'll present our main topic, and that is what are the hottest stocks to trade on the ASX right now. Remember, this is the show where you learn about how to make more money in the stock market, so come on and be part of the show and ask your most burning questions so that we can fix anything that may be holding you back. Tonight, as always, we'll share our thoughts on the stocks and the market, plus a whole lot more. Hello, I'm Janine Cox, and joining me tonight is Dale Gillham, and we're Australia's most trusted stock market educators.
Hello.
G'day. Welcome.
I know you're getting excited.
I had this terrible thought in my head, welcome back, welcome back. What was that show?
Welcome Back, Cotter.
Oh, I think my parents listened to that.
I used to love that show. But then I'm showing my age by loving that show. Half of the people here watching this probably don't remember it, and the other half probably wish they didn't remember
they were born well after it.
Yeah, Welcome Back, Cotter, and all that. So, yeah, there's a lot of shows back then I used to watch, but I'm more excited about Easter coming.
Are you?
Yeah.
You've talked about Easter and Easter eggs, and then you made
I know, because I get a couple of extra days off. I get a couple of days off. I've been working pretty hard lately.
You have, yeah. You deserve it.
Yeah, we've been going through all the reaccreditation of our course. I've been writing madly stuff and case studies and putting stuff in the modules to make sure they're updated and everything else for reaccreditation. So it's fantastic, but a lot of work. I'm glad we're coming to the end of it anyway. But Janine, we really do have some great emails this week, and they show how our viewers are really thinking about the market. And the importance of having rules. Now, however, as generally the case, they also show how many do not really understand the market or investing that well, which is why they are watching us in the first place, so they can learn a better way. Now, the purpose of this show, as you know, Janine, is to help people become independent. And that means turning the light on in what is essentially a dark room for so many now. Each and every week with this show, we strive to turn the light on to help everyone can see what is really there and not subjected to the false realities that so many people get subjected to. Now remember, this is your show, everybody, so if you do have a burning question for us, don't just sit there, get active and do something, as you'll never know what might happen if you do. So send in an email, or better still, upload a 30-second video of yourself to Dropbox, then send us the link and we're happy to answer all of your questions.
Now, for those of you who watch the show, you know that you've got to send in your questions, but if you're new, you don't know this yet, info@wealthwithin.com.au and type Wealth Within Live in the subject line. As always, this is a two-way street, and that means right now, click on the subscribe button and we'll do our bit to answer your questions. Moving on, it is the 4th Tuesday in the month. Oh my goodness, it's come around so quick. And this means that we look at currencies. So let's get into the charts right now, shall we? This is my favourite part, looking at the charts, but
Okay, so what's on the screen we've got here?
Okay, right there we've got a great list of currencies which Dale's going to talk about, aren't you, today?
No, you were going to do that. You set it all up, so you're in charge of the mouse.
Really?
Yes.
Wow, he's telling me to pick it up. So here we go on the screen there. You can see these are the monthly returns or growth rate, if you like, for all of these different currencies. And
So this is March.
Yeah, and they're probably thinking, why do I need to know this? I mean, you might like to shed a bit of light on why that's important.
The currency market is the biggest market in the world, and it affects the stock market.
Yep.
So we need to know what currency rates are doing because it does affect companies.
Mm-hmm.
BHP and Rio are probably two classic examples that currency rates really affected, obviously, because commodities are traded in US dollars. So we need to understand whether the Australian dollar is rising or falling against the US dollar because it will affect our companies.
Great.
And it's not just those companies, there's a lot of companies.
Well, let's have a look at that then.
Yeah.
So we're just looking at the Australian dollar versus the US dollar, up 0.52% for the month.
Yep.
So that's interesting. So that obviously means that as our Aussie rises, that obviously to purchase in US dollars, we've got more buying power.
Yeah, so as our dollar rises against US dollar, we've got more buying power, which means we can, the imports get cheaper, but the other way is our exports get more expensive, so it's not as good for manufacturing.
Right. All right. Now, right at the bottom though, the Australian Canadian dollar is down 1.14% for the month. So that's interesting to see. Asian currencies are in the middle of the board at the moment, except for the Japanese yen, which is right up there at 2.66. What do you think about the Olympics that's coming up? Have you heard about that? And
it's been one of the, I mean, they're going to run it, which is fine, which I think is fantastic that they're running it for the athletes.
Nobody can go, from what I heard. Is that true?
There's probably a lot of people that can't go or probably won't go simply because of COVID and everything else.
I thought that, and maybe I heard wrong, but I thought that all international guests are not invited.
It'd probably be locked down. But let's get back to currencies. I think I'm excited because they're opening up the New Zealand border to the world. Victoria and New South Wales can travel to New Zealand. Hey, and look, up $1.54%, so we can all go to Queenstown and go skiing and things like that. Get a bit more bang for our buck.
Yeah.
Are we going to look at any charts?
Yeah, I think just quickly, let's have a look at the Aussie dollar versus the euro. So we're seeing an interesting rise there over the past 3 or 4 months, but at the moment it's just stalled. So we're looking at the currency stopping in there, the currency pair stopping in there at 64, is it, and a half, roughly? And then we've got the Aussie dollar and the British pound sterling. So for people who've got family over in the UK, I don't know that many people will be travelling over there in a hurry anytime now.
It seems to be holding up quite well, doesn't it?
It is holding up incredibly well. And I think if it gets above that, is it 58 cents
About 58
or 57? Then we could see a really nice rise continuing on this currency pair. And looking further to the right, we were talking about the Japanese yen before, and it's leading. Look at that, broken out of the blocks there. It just looks incredible. There's this resistance level across here, somewhere at about, is it 88 cents there? So that might slow it down temporarily, but it looks like it's just raring to go. 1, 2, 3, 4, 5 months up. That's just an incredible run.
Yep, and the US dollar.
Then we've got the US dollar. So we've stalled a little bit relative to the US dollar over the past few months, which isn't really a concern. It's to be expected.
A bit higher than what the RBA would like it, isn't it, really?
Well, yeah, look, I mean, I was listening to a discussion that was had by one of the research, or who was it, like one of the chiefs at the NAB, about what's going on, and I think that he was implying that the RBA would like to think that they have much more of an influence on what's happening with our currency than what he described that they actually do, and it's more commodity related than anything else. So,
I think it is too. I think he's right.
So looking at that, you can see we've got, what is it, 77 and a half approximately?
Roughly 77 and a half cents.
Yep. I mean, I think there was talk about potentially it going to 80 cents.
Yeah.
In the mainstream, different analysts were discussing 80 cents. And so when you get a bit more of a consensus, often the currency will move to those levels.
Yeah, and I know the US dollar is increasing or has increased in value against a lot of currencies over the last few months. So it is pulling back, and it's good to see the Australian dollar holding up against it.
Yep.
But it's probably a tiny bit higher than what the RBA wants.
Look, I think in this discussion about currencies, it's really important to mention that it doesn't matter what you're analysing, whether it's a stock, a market or a currency, the same theory applies to understanding the direction and where something's likely to travel, and also how to trade it.
Yep, totally correct. So now it's the time to get into answering all of those fantastic questions that you have. And the first question we have tonight is from Andrew, and he says, hi Dale, last week on your show you mentioned that you preferred bar charts over candlesticks charts, yet you say they display the exact same information. Can you please explain why you prefer bar charts? Thanks, and keep up the great education you and Janine are providing. Now, I want to answer that really, really simple, because you actually said last week why you prefer bar charts than candlestick charts. You actually told them last week.
I did.
And you also referred everybody through to an episode of this show from a couple of weeks earlier where I actually bring up an example of a bar chart and a candlestick chart. So we've already answered the question last week for you, but did you want to go and answer it again a little bit?
Just put simply, you can see everything on the bar chart, but with the candlestick chart, because it's more symbolic, you don't necessarily see the activity like you would because of the colours. The idea is to have those colours set correctly so that you can see not just the psychology of the market, which is what the candles are really good at showing you, but also it shows you direction in terms of the swings on the price action up and down. I think that's so important.
A whole lot more. It's a lot easier to see a lot of stuff. I find a lot of people with candlesticks miss a lot of the detail.
Yeah, because, you would be looking at a chart all in black and white and how do you see clearly those troughs, those peaks and troughs, as you were saying?
So if you want to understand the difference between bar and candlestick charts, go back a couple of weeks and look at the show that we had from that one. It'll tell you all about that. And we go through a little bit more in depth about them too, don't we? So that's it for that one.
And we've got another question. This one's from Andy. Hi, Dale and Janine. I'm emailing as a follow-up from a question that you answered back in January. I had SHV on my watch list and was waiting to see if it bounced off the $5 mark, which it has done. I jumped in last week at around $5.54. Maybe I was a bit too early, but it is looking good to me and seemed to break out of a downtrend. Would you agree? Now, I've got that chart up on the screen there. You can see Select Harvest there. That's SHV. And I've got the monthly chart on the left-hand side and the weekly chart on the right-hand side. Now, the monthly chart's not looking too convincing just yet, but this month so far has been a really good month for it. The risk is, if it falls away below 550, that we could really see it head back south again. But at the moment, it looks like it might be, making a good move to get there. This is the first good move since that high anyway. Yeah,
it is. I mean, it's only just went below $5. It went down to about $4.90 back in January. It's looking okay now. It's had a big week last week, so you would expect this week would be a little bit more pull back a little bit. So as long as this week doesn't sort of pull back too much, I like it.
Look, he's picked up at 540. I'm not really sure how he was talking about how it had gone through that downtrend when he picked it up. Did you see that?
No, I can't see that at all.
You probably can't because I haven't shown it.
No, you haven't shown it. I'm mucking
around with the chart.
I know, you always get in the road, don't you?
Okay, but if you look at the angle of that trend going down there, you can see it actually finally did break above there, but I'm not sure what he's looking for exactly. So,
well, he did say in his question that maybe he's a little bit too early.
Yeah.
And I think it's going to be one of those ones that's almost like it was good. You could have bought in there, but maybe is it too early? I'm not sure.
He's too early. I think he was second guessing. In terms of rules, though. It's all good in hindsight. You can see that stock's gone up since then.
But if you'd done a lot of price analysis on this and you're confident in that level, that support level there, and you're confident in your rule of entry, would you have entered in around 540?
If the entry rule was there to get in.
No problems.
The only thing that I'm looking at is across here on the monthly chart. I'd want to know that there's significant upside to justify the risk in taking the trade.
Yeah, but it's a great question, and I do like the stock, and it just needs to prove itself a little bit more, Andy.
Okay.
But I wouldn't be discouraged about what you've done. I think you've done an excellent job in getting into it right now. I just need you to maybe be a bit more trust in your rules, I suppose, and making sure you've got an exit strategy on that. Now, our next question is from a good-looking dude called Will, who says, "Hey, Dale and Janine, would like your opinion on SCG or Centre Group. I'm planning to enter the stock once it closes above a strong resistance at $3 on a weekly chart. I've also noticed that you can draw down a trend line from its peak in 2016. And once it clears the resistance, it has a good chance of testing it. Plus, there's a gap on the weekly chart at around $3.20 as well. It also pays out a pretty solid dividend. Thanks for your continued content." That's our pleasure, Will. So let's bring up Centre Group.
Yeah, well, looking at the chart, he was talking about trends from 2016. He might be talking about this high up here, being able to draw a line down. Well, on the monthly chart, it'd still be well under that line.
Yep, correct.
Which means that it could rise up and then eventually hit an important level of resistance and turn down. But looking at the level that he's got there, I think it's a reasonable decision to make, to choose something once it breaks out of one of those sideways moves.
Yeah, I can't see his trend line, which is you're talking about, only on the monthly chart. There's definitely not one on the weekly chart at this point in time, but I'd agree with you. I think that $3 is a pretty a good resistance level, but if it does break above that, I'd probably want to see a strong break above that, not a weak break above that. I know some people jump in and they sit above that sort of that $3 mark, because a lot of people sit around round numbers.
Yep.
And so some people will be sitting at that $3 going, yeah, I'll get in when it breaks it. So you might see it spike up a little bit, and then the vacuum sucks it back in as the buying volume gets taken up pretty quickly. And then you get others selling into it, so they might get sucked back in. So don't be surprised if you do get into it around the $3, it pushes up and comes right back down or goes below the $3 a bit for that. Or that's why I was saying I'd rather wait for a solid break above it. That's my point. Let that vacuum exhaust itself.
The downside to that sometimes, and you've got to weigh up the risk and reward in making these decisions, because the downside to that is that it could break up out of that move, and like you say, it could pull
Quickly
back.
reverse.
But then the problem is if you wait for too long, for too much confirmation, you might not have the upside to justify the trade.
Correct. Perfect. I love it. I love it.
All right. We've got another question. This one's from Brad. We've edited a lot. It was bigger than War and Peace. This one, I can't quite see it there on the screen. Long-time viewer of the show, first-time email. Anyway, the question in regards to stop losses and trailing stop selling. I have read Dale's book 3 times now, trying to get my head around this. And in last week's show, touched on it again, but I think I disagree with Dale's example. There you go. He's allowed to.
Yeah, he's allowed to be wrong too.
The way CommSec is set up, I would have been stopped out of that share way before Dale's example. A lot of the time I was getting sold out of a share that I didn't really want to sell from either a stop loss or a trailing sell. How do you get around this? As I believe, after having read Dale's book, that this is a good way to protect my hard-earned, but it doesn't seem to be working for me. So that's a really interesting one, isn't it?
Do you want to answer him?
I thought I'd let you go for it.
Good on ya.
Sitting on the edge of your seat
Good
waiting.
on ya. Basically what that's saying to me is you're setting your stop losses wrong. So you're not following exactly what we talk about, because the way CommSec sets stop losses on, and you may have said it a few times on the show, we never, ever, ever put a stop loss into a broker system. We just don't do that. So if you're getting stopped out, and let's say, because we talked about the 15% stop loss last week, and we showed people how to put it onto a chart and where we would exit. And what brokers will do, if you set at 15%, and let's say that's $10, and if it trades, to $9.99, the broker, and you've put it in the broker system, they'll just sell you. But if it comes back during the day and closes at $10.05, Janine and I would still be in that stock, because we might have a rule that it needs to close below our stop loss on a weekly basis. So whatever our rules are, so it's how you're setting your stop loss. And the second thing is, sounds like you're setting it into the CommSec system. CommSec just sets stop losses like pretty much every single broker. It's about a process, getting that right, but having the right stop losses for the right stocks. And what I find a big sin that a lot of people do is have stop losses way too tight, and that means they get stopped out a lot. So if you're getting stopped out a lot, that tells me your stop losses aren't set in the right spots, and your trailing stop losses aren't getting set in the right spot. What about you?
Yeah, I agree with you. Sometimes though the market can be quite volatile, and it depends on the stocks that you're trading as well, because they can get whipped in and out quickly. If they're big liquid stocks, they're less likely for that to happen, but it still can happen. But if they're lower liquidity stocks, then you have to be mindful of that. So this is where learning how to back test shares and apply the rules correctly, and then be able to actually prove to yourself what works is so important.
Do you want to, we've got some little bit of time at the moment. Do you want to show people again how to set a stop loss on a stock?
We did that last week,
Yeah, I
didn't
know we did, but do you want to show them again?
we could, for example, show on Centre Group. This is
that's
not
fine.
in answer to Brad's question, but just as a discussion point.
Just a discussion point.
So on the chart there, you can see that Centre Group's trading sideways. So depending on whether you're trading really short term or more medium term, could depend on where you're setting your stop loss. Now, the basic one that you can set is as Dale talks about in his book, is a 15%. So let's say in practical terms, you think I'm going to trade the stock once it trades above that black line. So you might be trading it when it gets 1 cent above, but you may not even get in at that level, because you may not be able to get a position there. So, it's up to you where you set this. But just say we got in a few cents above that. It looks like it's tried to click right on the line. Oh, goodness me. I'm going to leave it there. I'm going to leave it there just as an example. Let's just say we got in at that level and then we set a stop loss underneath that move. There's a 13% stop loss. If we set a 15% stop loss, we bring that down as a standard stop loss, which is more medium term, then we'd be down there with the stop loss. However, from a trader's point of view, you know that the chances of the stock falling away if it actually fell to that are probably high. So why would you set it there?
Well,
So
there's two stop losses, isn't it? There's the initial stop loss that we would set on the buy price,
Yep.
which is if it falls away. But then
And
as
that
a
could be 15% or it could be
Correct.
anything depending on whether you're trading short, medium term and the strategy that you've actually tested for the stock.
Yeah, but what I was going to get to is sometimes when we get stopped out after buying a stock and not making money out of it, we're actually exiting on a technical exit, not necessarily that first initial stop loss.
Yes.
Because the stock, how it unfolds over the coming week or month, then gives us more information and gives us a different area
Yeah.
to exit, which can be a lot tighter.
Yeah, and the trend lines that you talk about in your book are just one example of those technical stop losses. But not every stock works best for an exit on a trend line. That's the thing to be aware of. So, for example, Centre Group a trend line may not be the best strategy
Correct.
for the exit.
Correct, and that's what you've got to do for each stock is work out what the better strategy is. Now, I know a lot of people change the stop losses. They go, I don't want to lose 15%, Dale, and I had somebody on YouTube saying, I only set stop losses at 2 to 5% on the stocks. And I went,
Wow.
well, you're going to get more of what you don't want. If you set stop losses that tight, you are going to get stopped out a lot. And when you're going to get stopped out a lot, you're not going to make a lot of money because you're always giving the broker a lot more money. And people that set stop losses too tight don't have confidence in their rules and to let them unfold. Because I know we do get a lot of comments about people, well, what if it goes away from my trend line? Then how do I get out of it? Or if it spikes up, how do I get out of it? Or it drops, spikes down, how do I get out of it? And that's when people ask those questions, that means they haven't done enough testing of the stock and testing of their rules, because I know that doesn't bother you or me, and it doesn't bother our students when the stock gaps up or down. We just follow our rules because occasionally it's going to happen, but your rules are there to protect you and get you in at the right time and out at the right time the majority of time. So it's about working out your stop losses in the right spots. And we can't teach you that on this show. It's just not something we can do, because just stop losses could take us a couple of hours to really get into how you do it, why you do it, where you adjust them, how you run with them, and what the best places are, because we do adjust stop losses depending on the stock and the volatility of the stock. So, but I think that really sort of gives a lot more depth around your question. My answer to you is, mate, you're probably using the wrong stop losses and not applying them correctly, because CommSec, I don't care which broker you use, it's basically the same way that they set them. You just need to know a better way of doing that, I think.
Yeah, I can remember, you talking to people about this, and I can't remember if it was at a live event or not, but you found that the way that they were setting their stop losses was just too tight, and as a result of that, they were end up making the broker a lot of money and not themselves. And I also remember talking to this one lady. She was just lovely. You don't find many cowgirls out there, traders.
No, you don't.
She definitely was a cowgirl, but she actually proved to herself that she was actually better off trading on the weekly chart than trading on the daily chart, which was an eye-opener for her.
There's one thing I often say to traders when we're chatting with them, and it really is about what you resist persists. So if you're wanting to if you're resisting not losing, then what happened is your decisions will cause you to lose more, because you're actually going to tighten up everything. You're going to tighten up your stop losses. You're going to do things and make decisions that will cause you to lose more. And that's what we find a lot of people, they trade too much. They don't have their stop losses correctly. They exit at the wrong time. They enter at the wrong time. But I think that really answers the question. And also, I think now it's time to get into our main topic for tonight. And that is, what are the hottest stocks to trade on the ASX right now? So Janine, how about you lead us into what I know is going to be an awesome topic for tonight?
Okay, first let's define what herd mentality is, shall we? Now, Wikipedia defines herd mentality, mob mentality, pack mentality, also gang mentality, is how people can be influenced by their peers to adopt certain behaviours on a largely emotional rather than rational basis. When individuals are affected by mob mentality, they may make different decisions than they would individually. Consistently profitable traders have solid strategies to pick stocks that are likely to be the next hottest stocks to trade. They know the key to success in the stock market is to set their own path rather than follow the herd. They also know that the herd often buys stocks just because they're not or looking at hot news, whereas the best traders know with a high degree of probability that they will be profitable and so tread their own path rather than following the herd mentality, where guesswork and a lack of strategy reign. Now, Warren Buffett famously quoted, "What's hot today isn't likely to be hot tomorrow." Well, what he was really saying is that the stock market prices always revert to the fundamental value returns over time, and so don't follow the herd. Buffett's warning is based on many decades of experience, yet many new to the market continue to throw caution to the wind and not heed it. All of the great traders of the market have solid strategies to pick stocks that are likely to be the next hot stocks. They do not chase yesterday's returns by buying into stocks that are the current hottest stocks. To give you a clear understanding of what occurs, we'll discuss herd mentality and how you can be ahead of the stampede. We will also share a list of the most highly traded stocks or hot stocks on the market. I know you're looking forward to that right now, and provide our view on whether you should jump on board or avoid them altogether.
Now, herd mentality is such an interesting subject, and one that I think we could spend hours and hours on quite easily. Now, herd mentality is such a very sneaky thing, as I find the vast majority are unaware that they are not only participating in it, but are victims of it. Now, if you watch YouTube videos, visit chat forums, read stock market reports, then to varying degrees, you are a participant in herd mentality. Quite simply, as an external source of information is affecting your thinking, whether you know it or not. Now, Janine, I think we've got to move on again, haven't we?
Yeah, well, what stands out for me is when we talk about herd mentality, there's an image that I saw recently of a herd of cattle stampeding towards the cliff, the edge of the cliff, and it's on your screen right now. So if you look down the bottom left-hand side, you'll see it was drawn by Be Rich, which is actually interesting, as to be rich, you don't follow the herd, and the cartoon is actually from Hedgie. I think that's how you say it, is it?
Yeah.
Essentially, the message this cartoon conveys is what actually occurs in the stock market. What investors typically do is grow in numbers the more herd mentality takes, until they get to a fast acceleration point just prior to a major correction. Now, new investors enter for the fear of missing out, thinking how much money they can make. Now, I've read books about irrational behaviour, and in an ideal world, the market would behave in an efficient manner. But in reality, the market is actually inefficient, and investors generally make decisions on emotion rather than logic. As you know, our goal with this live show is to assist you to move from making decisions based on emotion to knowledge and skills to make well-informed, logical decisions. Now, the benefit to you is that you will then pick stocks without the aid of external input, so that you're highly likely to invest in the next hot stock.
Okay, Janine, so how can you stay ahead of the stampede? Well, that is what Janine and I will discuss right now, won't we?
Why not? It's actually quite simple, really. If we know that 90% of traders don't make money consistently, and we know they generally follow the herd, then all you need to do is just work out what the herd does and don't do it. The herd will generally fail to get a proper education to trade the market. That's the first really big one.
It's also, if you clarify that just a little bit, they attempt to get it, but they're actually not getting it.
Right.
Do you know what I mean? A lot of people get a Clayton's education.
Okay.
So some people are thinking they're getting it, but they're not really. They're just getting information. They're not getting education. But the number two that we have is, or the one that really does stand out for me, which we consistently say, is they don't use proper rules to buy and sell.
Okay,
they
that's
really
a good
don't
one
do
too.
that.
And the herd will follow tips and read chat forums looking for what's hot, and waste time reading news that attempts to explain what's occurred so they can feel informed. They feel that if someone else is talking about it, then they must have done this research or their research. However, it's actually rarely the case. The big one we talk about on the show a lot is about risk management. Now, most have little or no knowledge on how to properly manage their risk, and so eventually when the market does turn down into a major decline, they sail over the edge just like the cattle in the picture.
Yep. So we have chatted about what not to do, and if all you do is the opposite of what the herd does, then you'll be successful, Janine. Now, what else do they need to consider?
Okay, well, there is a lot more we can share, but simply don't have the time to do all of this on the show and do this justice. However, there are some things we commonly see, and one is that brokers will tell you what other people are trading. So you don't have to go onto chat forums to find out. But is knowing this going to help you? And we don't think so, because it's not about knowing what's supposedly hot, it's about knowing why you are trading it, how to get in at the safest and lowest risk time, and then being able to exit at the most opportune time.
All right, so let's have a look at one of the large reputable brokers in our market to see what information investors and traders may come in contact with. Now, you've got something on your screen right now, Janine?
I do. Now, I've actually got CommSec, and the reason we chose this one, I could have chosen anyone, any broker website, but I just simply did a Google search and they came up at the top of the list. So obviously their IT people are doing their job. But looking at the list there, you can see.
So what are we looking for right now? We're looking for the top stocks.
We're looking for the stock. These are the highest volume shares traded.
They're the top 5 traded stocks right now.
Yeah. So this is the top 5 based on the volume.
Yep.
Now, of course, you and I, when we were having a look at this, we were thinking, I had a bit of an epiphany because, I don't generally look at stuff unless I'm looking for stuff for the show. I'm not searching for things online. Yeah. But then I realised, well, okay, if other people are following this, that's why they're asking us about all of these little stocks that come up.
Correct.
Because all of a sudden there'll be huge volume in particular stocks that are being traded, which is not necessarily going to help anybody. However, people are seeing this on websites that they're looking at.
We get sort of flavours of the month, don't we? People ask about same stock every week, and then it changes to some other one. So, where are we heading now?
So what we're looking at is those. We're going to have a look at these 5 stocks, but we really want to just scroll down for a minute because that's not the full picture. If we move down the page there, and the funny thing was when I was doing this and putting it together for the show, it actually changed.
It changed.
So I'd gone and sent all these snapshots and then they actually changed the data. So I think they're a few days behind. But looking at this top 20 traded Australian shares.
So that's weekly basis, is it? So it says the 15th to the 3rd to the 19th to the 3rd.
So that's that time period you can see there at the top of the screen. Now these are the list of all of the stocks, the top 20 most traded by volume. So this is based on the contract volume.
Okay.
You can see it there at the top of the screen that Zipco is at the top.
Can I just have the thing? You can keep talking. I'm just going to zoom in so everybody can see a little bit more about what you're doing.
And then you can see at the top there, 55% are buys and 45% are sells in terms of the volume traded. Now this is going to be interesting for some people. Some people, the penny might have already dropped here. 88E, 51% buys and 49% sells during that period. NDQ, which is actually an ETF, Beta Shares ETF, which Beta Shares are an Australian company, love them. 78% of the stock or the volume that in that period was a buy and the rest sells. Afterpay during that period, pretty much even.
So what this is telling me that even though they're the top heavily traded, doesn't mean they're bullish.
No.
It doesn't mean these guys are going to go through the roof.
And it really concerned me actually when I looked at this data and then I compared it to the top stocks on the US, right? That in the same sort of graph, because they don't have this skew in the US stocks, not lately anyway. I haven't looked over a long period of time. I haven't done, the research over say 3 or 6 months to see whether they're consistently mixed, because this tells you they're taking a bet either way.
Well, to me, if I just looked at this, I'd be saying A2 Milk and Fortescue are probably more going up because there's more buyers and sellers, but the rest are probably either going down or not doing too much, and Beta Shares is probably going up.
Yeah, so the average person looks at that and says, these are the most highly traded stocks, I've got to be buying those.
Correct, and it's not correct.
Right, without looking at direction, without actually understanding what this is telling them, and there's no description to explain it there. I don't know if they do that behind the scenes if they're customers of CommSec. But
okay, all right.
So I think that's really important to really grasp what's going on there. Now, Dale and I are going to look at the top 5 stocks and review those stocks. So we should have a look at those, shouldn't we?
Absolutely. So let's go and look at the 5 stocks, which is what we're doing right now, yeah? So we've got, and is it only 5, Janine, or is it 10?
Look, we're going to get into this in a second, but did you want to just talk a little bit more first before we do that?
No, that's okay. So you've heard our views on herd mentality and what it is and why you should tread your own path. Now, there are 3 words actually we'll actually leave you with based on what we're actually seeing here, and that's verify, qualify and quantify. And that's really what you need to be doing about what's going on. So, but first and foremost, to verify the source of information you get and the quality of that information is accurate, and then quantify how valuable information is, because failure to undertake these 3 things means that you'll become part of the herd. And it's a really easy way to determine if this is you or not is if you're often seen searching YouTube, watching videos of unqualified strangers telling you what to buy, then you're most definitely part of the herd. So what we're saying now is do your research. So whilst you get all this information on CommSec and other stuff, is where are you getting information from? Qualify what that information is, qualify how accurate it is, qualify how beneficial it is, and then check it all again.
Now, if we, for example, take those top 5 shares, and you know me, I always like to put an extra one in, so I actually put 6 in. But if we look at Z1P, which is that Zipco company, which often comes up in discussion, you can see there that when we're looking at the dates, now we just go back to the chart here, we can see that the dates that we were looking at was the 12th of March to the 19th of March, I think it was.
Yep, and it's going down.
And the stock's going down. So then we go and have a look at 88E. Now, this is why it's so important to always look at the chart and don't just listen to a report.
That's very liquid, isn't it?
Highly liquid share. Now, this has come up as one of the top stocks right on that list, which is deceiving to people who have no idea about the market and what's going on. They're thinking, oh, this is a stock I've got to look at. And it is going up, but hey, this is so risky, it's not funny. So then we've seen this big jump in the share price. So something's going on here.
There's a lot of shares traded, but it doesn't necessarily mean a lot of people are trading this.
No, it doesn't mean a lot of money's going in there.
Yeah.
Okay, so we're looking at that, and we're looking at NDQ as well in that same period. So we can see there that this is another hot one that's on that list. However, we're looking at I think it was 12th of March to the 19th. We can see there it really didn't move much at all. Okay, so then APT, another one, and that makes sense based on what the data was showing us on the ComSec site. So here we had 12th of March to the 19th of March. We'll move to the next one. Now, this one was like that other small stock, 88E, in that it's actually going up during that time. So therefore, you would expect that that would be reflected in the data we were just looking at.
Well, you've got 138 million shares at 16 cents. So
yeah. Now, this is OneView Healthcare. It's a stock. Now, that does actually look interesting, but again, highly liquid share.
Highly illiquid share.
So what happens is this could get talked about in the media, and there could be some great things happening with the company, but the problem is that then it could get sold off a couple of weeks later after it's gone, from the media.
So what you're saying is there's media and other information type portals will pick up on the highly traded stocks. They'll write articles and stuff about it to get other people interested in those sort of things.
Yeah, they could do, and they could get people like us or brokers to comment on why did that stock move or why is that most highly traded stock. Now, the challenge is that if they pick brokers, sometimes they might have a vested interest in the stock moving up, for example.
They could.
And so therefore the person who's new, doesn't understand how the market works, doesn't realise what's happening with vested interests who are putting out information.
Yeah, and so what happens is that by having that information going out, it creates a herd mentality because people are reading articles, they're seeing things on websites, whether they're any of the broker websites or whether they're on chat websites or other financial type of websites. They're possibly seeing it, hearing it in a podcast or something like that, but it doesn't necessarily make it a stock that they should be buying. So that's really what you're saying is about figuring out the research, and why we say to people all of the time, you need to become your own trader, not following everybody else. And I was only chatting with somebody today who, and I think I chatted to somebody about 2 months ago, they were subscribing to a system where they were following another trader. Like, this is the trader and everybody follows him, and it automatically, you put some money in and then whatever that trader's doing, your portfolio gets traded in the same stocks. And I said to the person, well, what happens if the person gets hit by a bus? What do you do then? Because they're not there to do the trades anymore. And the person said to me, well, when I did that, I opened up the account and then I lost all my money. And, she said it went up for a little bit and then it tanked and went the other way. And I had the other person I spoke to about 2 months ago said they were making money for a little bit, and then the person that we were following obviously had a mental breakdown and just wiped out his portfolio overnight, and everything automatically got traded at the same time for us, and we lost all of our money. So
actually, it's interesting you say that, because I had a conversation with somebody when all of this stuff started. I think it was a few years ago when they started inventing this system where people can actually be following other people's trades.
Yeah.
And so what was actually happening was these broker sites were actually allowing people who had almost no, like this guy came and told me, he said, I've got a friend of mine, and they've actually asked this friend of mine who's actually been only trading for 3 months or something like that, 3 or 6 months, if they would like to earn money. So they're actually earning money the more people follow them with their trades. And the person was only trading for 6 months.
Yep.
And other people are finally following that.
Yeah, because the thing is with herd mentality, what it is people see somebody else there that implies they're an expert, and they go, oh, well, if they're an expert, they must know, and if they know, then I'll follow what they're doing, because then I don't have to do the research, because I'm not necessarily as good or educated enough as that person, so I'll just follow what they're buying But what we keep saying to people week after week after week after week is know yourself while you're buying, have rules for yourself while you're buying, and have rules around managing and selling and understanding all of that. Then you don't need other people around you, and it doesn't matter what happens on the marketplace because you should never rely on a broker. You should never be relying on another person for your trading or what stocks you're picking. If you're just taking a recommendation, then you are not looking after your portfolio.
Look, I think it's good that we have transparency in the market, that the brokers actually put out information so people know, what the highly traded stocks are and what's happening. And we've got on the ASX website, the most shorted stocks, etc., so that people can, feel comfortable that things are transparent and they can find information firsthand.
Yeah.
So I'm not criticising that in any way.
No,
it's more about the fact that people who have no idea what that information really is and don't really understand it and what it means to them, should you just ignore it? And I would say in the beginning when people are starting out, you could look at it as just out of interest and see what you can learn from it. But the challenge is when you're starting out, what you're seeing is only this.
Yeah.
You don't see it because you don't actually know what you don't know, as we often say on the show. Whereas this is the whole picture, and we can actually help you and open things up. So by explaining these things, otherwise how would they know?
And it's that whole FOMO case. It's like they're seeing this, they're chatting about it, they're seeing it moving, they're seeing volume going up, they're seeing it on those top traded stocks list. They jump in hoping the buy and pray method, hoping to make money. But what we consistently find with the people we're teaching is they find their hotter stocks before they run, and then they make good money really quickly because they pick them at the right time and they get out of them when the people with FOMO are getting into them at the end of it. So it's a whole different ball game. But I know this is a subject we can go on for hours and hours and hours.
Yeah, look, just to quickly recap on that and wrap up. OneView Healthcare, just as an example, let's go back to the list if we can. Now you can see 57.43. During this period it was slightly more, so say 60.40 in favour of the buyers pushing the price up, and yet the price was quite strong, wasn't it, going up. 88 Energy was roughly even, so it doesn't quite make sense to me, and the website doesn't explain it enough for new people. I think it'd be great, if there was more explanation on what this means to people and what they can take out of it.
Yeah, so it's nothing against what CommSec is doing. It's just the people's understanding of what it actually is or should mean, and that's really the thing. It's about buyer beware, I suppose. It's probably a good way of saying it. So, but anyway, I think that wraps up for our main topic for tonight, doesn't it?
Yep, I hope you've enjoyed that. Now let's get into some more emails, shall we? But before we do, remember to hit that subscribe button now. And whilst you're there, give us a big thumbs up and click on the like button. Thank you very much for doing that. Now, we've got a question from a regular viewer. This is Warnsey. Don't you just love Warnsey? Yeah. Someone asked me today in the team, is that Shane Warne?
No, it's not. Probably he's got a different email address. I'm sure Shane Warne doesn't need to watch us.
You never know.
Well, he might. He might think we're great. Anyway,
do you want to take it?
Oh, yeah, okay. Wanzi says, hi, Dale and Janine. Thanks for tonight's show. Our pleasure, mate. Could you please take a look at vicinity centres for me? I'm looking at perhaps making a purchase soon. Please feel free to waffle on as much as you like. That'll be Janine, not me, because I don't like to waffle. Thanks for your time tonight.
Gee, what's this about?
Is he having a go at me because I like to talk a little?
He knows that you waffle. He's probably watched the show long enough to know. Thanks a lot,
He's probably got a stopwatch going. No, Janine talks 6 times more than what Dale does.
All right, there you go. You can see on the charts there, we've got the monthly on the left as usual and the weekly on the right, so we can see what's going on in the bird's eye view. Now, Vicinity Centres only actually launched on the stock market, you can see there, in 2011. So we don't have, decades of history, like you say, do on BHP, but still, that's a good amount of data, almost 10 years to have on a stock to learn how it moves. And to add to that, it was going up and moving down as well. So you've got the benefit of seeing what happens on a rise and a fall. But look, this is an interesting one, isn't it, in terms of making sense of things. So what's your take on this?
Well, it's interesting to me when you see, obviously, it tanked with, because obviously it's in shopping centres. It just tanked throughout March because obviously shopping centres are closing up. And I know there's a whole lot of stuff going around, and this sort of space is, you only have to walk around the shops. I mean, I was in Lygon Street on Saturday night, and there's so many restaurants that are just lights off.
Did you have a gelati?
No, I didn't have. I was a good boy. I didn't have a gelati.
Since when are you a good boy? I see you sneaking the chocolates.
Since when I was a good boy, good on you. But you see that in the shopping centres as well, where shops closed, etc. And obviously retailers, people going into retail shops have been down. So you're interesting how they're coping with all this. But when you look at the chart, you can see after the drop, it did take off for people thinking they were bottom picking, thinking it had fallen too hard. But since then, it really hasn't done too much. And I don't think we're going to see a lot out of these companies until we really start to see retail get back onto its knees.
Now, I'm sitting here tapping my hands almost on the table, but not wanting to make any noise because I'm thinking, why isn't he mentioning that it's very similar to SCG, same sort of area?
Because I was waiting for you. I was setting you up.
Jeez. That's my joke. Okay, so they're very similar. So you could almost trade both of them at the same time, couldn't you? Now, the challenge with this is obviously if you did, is that if both of them fall, then you've got, a double whammy there on the stock.
Correct.
It's a matter of deciding what's the better share. And I mean, SCG is the bigger stock.
Yep.
So, it may be that it fits your portfolio, but you've really got to choose horses for courses. But if it does take off above that level, it could be quite interesting in the short term at least.
Yeah, it could be, and I think you're right. I mean, at the end of the day, it's about having good rules around that and looking at what kind of exposure these guys look at the forward earnings for these companies and look at that fundamental data, not just the chart as well. But I think when they break through those levels, then they could be going up. But I wouldn't expect them to be record breakers over the next 6 to 12 months.
Okay, now we have a question from James. Hi Dale and Janine, I'm new to the investing game, about 3 months, and in this time I have purchased 9k worth of shares in 6 different companies. I've done as much research as I can for the stocks I have purchased. Was just hoping if you could scan over, not evaluate each individual company as I know you'll only allow one, and just let me know if I am on the right track, if my method of arriving at stock selection is okay, or if I need to change my tact. Now, that's an interesting question. I like his thinking. He's not sort of saying, have a look at my stocks, but he sort of was. He was. When I read this, I'm saying to Dale, well, where's the stock that we're looking at? And in his email, he'd actually shown us a snapshot, if you like, of the stocks that he's actually got in his portfolio and the gains or losses.
Yeah, he snapshotted his phone screen or something with the stocks in all of that. So.
Yeah, now some of them looked like good shares, but there was a mix of shares.
We had Westpac in it and I think Woodside in it.
Two big ones, and there were some smaller ones like InvoCare was another one.
Yep.
But it was real mix, and so I wasn't sure what his strategy was or how he was going about adding those shares to his portfolio.
Yeah, well, the way I look at the question is there's not enough information there for us to answer his question because we don't know what his portfolio goal is. We don't know what his strategy was to pick the shares because just showing us a stock code and how much your gain and loss is doesn't tell us anything. It doesn't tell us anything about the position sizing that he's got in any of them. It doesn't tell us how he arrived at those stocks, like what kind of analysis methods. He said he did analysis, which is fantastic, but no information on how the analysis was collected, whether it was all fundamental or whether it was a bit of fundamental and technical or how it all put together. So right now, Janine and I really can't answer your question because whilst we looked at the portfolio, would we buy a portfolio, would Janine and I construct a portfolio like that? The answer is no, because we wouldn't mix the stocks that you have in that portfolio in those ratios or what you've got. So, but not knowing what you're doing in your process, it was really, really hard for us to talk about it. If you'd sent us a spreadsheet with your buy date, and what your position size was in terms of dollars and etc. like that, we would have had a better guess at it. But it probably wouldn't have changed much of our answer anyway in terms of it's always about having what's your why, what's the goal, is it short term, medium term, long term, what are you looking for, income or growth or a bit of both. So what is it? We don't know any of that from you, and as I said, we don't know what kind of analysis you did to pick them. So, but great for you, you're actually giving it a go.
He's giving it a go,
I think that's fantastic, and you've given it a go of doing your best analysis. Just keep at it and just keep learning and learning the way to do it, but I'm not worried about his portfolio, are you?
Oh, they look like some good shares, but we haven't analysed each individual one, so he perhaps could send in an email and ask us what we think of particular stocks.
I think he's done all right with Westpac, and I think Woodside's another good one as well, but why he bought them, I don't know. So, but anyway, thank you for asking the question. But the next question we do have is from Joel, who says, "Hi, Dale and Janine, I have a question about Blue Scope Steel." So awesome. It appears to be on its way to take out the high of July 2018 at $18.83. I couldn't get 3 troughs to draw a confirmed down trend line on. You don't draw down trend lines on troughs, mate, to break, but it has roughly 50 or run roughly 54%. since its low of COVID. Now, looking back at the data, it shows that the stock has potential for long runs if given a good stop loss to allow it to move. Now, I do not own the stock and I'm looking at a medium to long-term 12 plus months if the trend will allow it. Please help me strengthen my analysis or correct me if I'm wrong. Always much appreciated. Big thumbs up to the team. The team will appreciate the big thumbs up. So
yeah, well, looking at the chart here, we can see there that it has actually taken out that 2018 high. So perhaps when he formulated his email to us that it was just before that happening.
I think he made a typo on his email because he said downtrend line, but he probably meant uptrend line.
Yeah, because it's actually in an uptrend, a really nice uptrend there on the chart, and it's gone up 130%, I think, since the COVID low. So that's different, again, to what he was saying. But look, long term, I like BlueScope Steel. It's just a question right now about whether it's going to slow down temporarily or not, because it is at a really important level of resistance, and it's showed for months, right back to I think about, was it November to 2020, that it's really struggling to get through that level. All the opens and closes of the last 4 weeks are all around the same level, all indicating that it may need to slow down a bit before it goes up. So
it's a lot of sideways movement through from November, longer than the All Ordinaries Index. I mean, if we use this sort of thing, it's been going sideways for pretty much 18 weeks now from that point, because obviously that bar there is pretty close to being that high, and we're not much off it right now.
Yeah, and it's not it's not unheard of for this stock to do that, to go sideways for long periods of time. It often can and be quite volatile in the process. So, what would you say to him?
Look, I'd say keep up the good work. I think you are right in a lot of ways. It has got an uptrend line. If we could get an uptrend line underneath that, but I'll roughly do one for you if you like. Where's the trend line? So roughly from, it's in the wrong spot.
Should I correct your trend line for you?
Yeah, don't do that. It'll embarrass me with our students. It's always the way when you're live and you need to do something.
Can you just pick it up and stop playing with it?
Okay, good on you. But it's roughly running on that. I mean, there's no downtrend line on it, but I think it was a typo, so I'll let you have that one.
You know I'm going to love this after the show, don't you?
You will. You'll stir the hell out of me for the next week. But while it's staying up here, but it might just come back and touch the trend line again and then go for another go through that level, but you don't know. But right now, I think I'd be sitting back watching a little bit before getting into it.
Yep, okay. I spoke to somebody, as you know, last week who watches the show, and she said just to give you hell. Give you a hard time.
No wonder you've driven me to drink.
We have an email from Wayne who says, "Hello, Janine and Dale. Since retiring, I have been drowning in an ocean of misinformation with regards to share investment. Smoke and mirrors from paid advisors who seem to offer everything after the share events but only continuing fees before real share events. I stumbled across your video shows the other evening, and finally you've provided a breathing tube to allay my fears. I've examined your portfolio and we have top ASX shares, but our finance manager is happy to just hold them, not selling and rebuying through the cycles. His attitude is that over 10 years we'll top 10% on our investment. So should I study the 2 books, complete your trading mentor course, and then challenge him on his just hold 'em attitude?"
I think you can do it right now. I really don't. He actually put a lot more into that email. We've had to take out his portfolio returns over the last 3 years. I don't know whether you saw that before I took it out.
Yeah.
But I mean, he's not making 10% now over the last 3 years.
He could actually go back and look at what happened over the last 10 years and the 10 years before that, etc., and then show his accountant or his advisor that that's what the history shows.
Yeah, and he could do a whole lot of stuff like that in terms of looking at the stocks he's owned. Or he could just look at the top 10 stocks, from reading my book. I think
the only challenge with that, I suppose you can get them out of your book at the time.
I think he mentioned he mentioned getting my book and possibly doing our beginners course. But just getting the top 10 stocks on the Australian market, go back 3 years and just assume you bought them. And then look at the returns over the last 3 years, and then you can have a look at that. Now, that's not definitive proof about whether an advisor is going to do better or worse than you, because all too often we find people say to us, I might as well do it myself because I can't do any worse than my advisor. We get that a lot, but sometimes people do. And sometimes it's much better to leave your money with an advisor because they're not going to be emotional with it. But the question I ask is the question I always ask people when they're asking about an advisor is I say, what is the value add over and above what you could do? So if you could just buy the top 10 stocks and hold them yourself, what kind of return would you get? And can the advisor add more to it than that? That's really the question, because if you're doing almost nothing yourself is going to get a better return, then why would you be paying a fee for somebody else to do it for you? And that's really the question there is, if you feel they're giving you value, then stay with them. Don't go away from advisor, because there's some brilliant advisors out there who really are helping people make money and doing portfolios. But it's a more holistic view rather than just a stock portfolio too, depending on whether you're retired too. So you need to look at tax positions. You also need to look at, sometimes it's pensions as well, and all sorts of other areas and risk that you need to look at as well. So it just depends on what your goal is and what stage of life you're in. But right now I'd be looking at your portfolio. I'd be looking at what you could achieve yourself. If you do read the book and do the course, that beginner course, you'll definitely be able to challenge your financial advisor and go to him with proof. There's no reason why you wouldn't be able to do that. And I'd encourage you to do that, because if you want to take control, take control. That's what we say to people, take control and you'll do better.
All right, next question. Our final viewer question tonight is from Chris. Hi Dale and Janine, is there any way that you can tell if a stock is being heavily short sold? Now, I thought that was a really good question.
I know, we've covered this a couple of times, haven't we, over the years?
We have. Now, on the screen there, I actually have an example of where you can find this information. So the ASX are fantastic in that they actually have a list of all the short sells on the market. So you can see there that this one was actually for the 22nd of March. It shows what the short sales are for the ASX and SHIX. Yep. And it's a total list. So you can see, if we just quickly look down that list there, I'll just point at something there. Yeah. We've got, say, Abacus Property Group, right? Yep. That's a stapled security. There's 188, is it 1,000?
Yep, 188,498.
Yep. And there's the total volume of actually shares that are issued capital on the market. So it's a very small percentage. It's saying 0.02, I think it says. Yep. Percent of actually all of the total capital, issued capital, is actually being short sold. If we go up the list a little bit further, you've got one there.
There's one at 0.27.
Okay, so that's a good one. Okay, ETFs, this is battery tech and lithium. Okay, so at the moment, this one is being shorted more. So there's 0.27% of all stock issued capital is being short sold. But these are still really low, aren't they? I mean,
they're really, really low.
It's very small percentages that are coming up here. Now, I'll scroll down the list and see if we can find anything bigger.
There's
there we go.
7.83 down there.
7.83%. So we can see BetaShares Global Banks ETF. At the moment, this is being shorted. So somebody's taken a position there, or lots of people potentially have taken positions expecting that to go the other way potentially. Then we've got another one here. This is the Van Eyck Vectors Global. It's interesting that it's coming up with the ETFs.
All the ETFs.
Being showing short sales there. Now, I can't see any others. I'm just scrolling down the list that stand out at the moment. But this is this list. You can access at any time by Googling ASX short sells, or just go onto the ASX website, asx.com.au, and have a look at the list. Now, this is obviously going to change from day to day, and if the market was to be sold down heavily, we may get some much bigger numbers there appearing on that right-hand side.
Well, that was the question I was going to ask you. Saying is if there's not a lot of percentage short sold on a lot of the stocks, what does that imply for the marketplace?
Well, in effect, it implies that it's going up over time, or it could just track sideways.
Well, what it's saying to me, our market's been tracking sideways for roughly about 15, 16 odd weeks now. All year we've been tracking sideways. Right now, it's not wanting to go up, it's not wanting to go down. My expectations, it'll probably have a couple of weeks down into April, but I'm not expecting any massive falls. And it looks like the short sold list is not expecting massive falls at this point in time.
Yeah, look, if you're interested in this, you should look at it through reporting season as well, and just see how that changes, and look at it when the market actually starts to pull back. So particularly often the market can pull back around April, May, and it's good to have a look at what's going on, particularly when the government is the federal government's going to talk about the budget. That can obviously change things.
Yeah, reporting season is a really good one. I like that because often you get more volatile movements during that particular time. So, if you were looking at stocks for short sold, what would you define the list of looking at just the top 50, or what would you look at?
Look, I don't really pay much attention to this unless I'm really trying to explain why a stock is falling. Because we're looking at the chart and seeing what's happening on the stock chart, and if there's anything significant going on, it will be reflected in the price.
I think the last thing I'm going to say is that just because it's on the list doesn't mean it's going to fall.
Well, that's true.
So
Yeah, look, last week I shared an inspiring quote by Albert Einstein. And you liked it so much, or so you tell us, I thought that I would share another quote from him which states, education is the progressive realisation of our ignorance. And right now, you're sitting there investing your time watching our YouTube show in order for you to gain some knowledge around investing and trading stocks. And that's great. And essentially, according to Einstein, become less ignorant, or rather more knowledgeable about the market. And we hope what we are sharing with you is really helping you to understand more towards becoming more self-directed traders and not those who follow the herd. And I'd like to thank everyone who contributed to the show tonight. The more questions that we receive, the more we share our thoughts and knowledge on trading and investing, and the more everyone benefits. So remember, watching this show is only part of your journey. You may have a question on your mind, or maybe something's holding you back that we can fix for you. If you are serious and you want to find out more about how you can consistently profit, then call our office on 1300 858 272 or email info@wealthwithin.com.au.
all right, Janine. Well, we do hope you've enjoyed tonight's show, and may I give you a big thank you to those who participated. As always, we are here to help, and we hope what we covered tonight has made things just a little clearer for you and helped you so as to make your journey a little bit better and a little easier for you. Now, what we do each week is a two-way street. As you ask us the questions and we give you the answers to help you, and all we ask in return is that you hit that subscribe button now and show your support for the wonderful team who bring you this show each and every week.
So are you thanking me for participating tonight?
I thank you every night for participating.
There you go. If you enjoyed this week's show, then put it into your calendar to join us right here on this live Australian stock market show every Tuesday at 7 to 8 p.m. If you would like to have your questions answered on the next show, or if you have a topic you'd like us to cover, then email info@wealthwithin.com.au and type Wealth Within Live in the subject line. You must email before 3 p.m. on the day of the show.
Okay, as always, thanks for joining us, and we hope you have a great week, and we look forward to you joining us again next week. But for now, goodbye, good luck, and good trading.
Good night, everyone.
Do you want me to give you an elephant stamp or something every week for your good girl?
No way.
No way.
No, I just don't want to comment.